Guys, in the last video, we talked about the number one mistake you were making when it comes to Market Cipher B, and I know because I was making the same mistake too before I was profitable. If you haven't seen that video, go check it out. I'll put a little tick thingy at the top right of your screen right now. Go check it out. In this video, we're going to be talking about the number one thing you should be looking for when trading with Market Cipher B. And if you wait till later in the video, we're going to talk about how it kind of coincides with CryptoFace's basic strategy. So make sure you stick around. Before we begin, a quick thank you to everybody supporting the channel using my affiliate links. I appreciate you. If you're new here, welcome. If you're returning, welcome back. And if you're returning, you should probably know what we're going to be talking about. You should probably be able to see it on the screen right now. But if you're new here, perhaps I'm going to help provide some clarity to you. This is the exact signal that I saw on Market Cipher B for me to short Solana at the exact top, currently up 522%, which, by the way, is a trade setup that I gave in my free VIP section of my Discord, which you can join by DMing my bot. The 4-digit code you're going to hear throughout this video, the first digit is going to be a 1. All right, Gio, enough ramble. What is the signal? Guys, the signal that we're looking for is something called a bearish divergence in this case. Now, there's a bearish divergence, there's a bullish divergence. You just flip it upside down, you get it. Okay, so I'm assuming most of us know what a bearish divergence is, but if you do not know, it is essentially where your price is doing something different than your oscillator, okay? Obviously, our oscillator is Market Cipher B. If price is making a higher high, but your oscillator, Market Cipher B, is making a lower high, that is called a divergence. Now, again, most people probably know that, but I'm going to give you a different perspective when it comes to looking at these divergences. Now, if you've been around my channel, then you know I don't just tell you what things are, I tell you why the market moves the way that it does, and I'm going to do no different with a divergence. So why are divergences even so significant in the first place? I'm going to try to explain this in the least painful way because I've tried this my third time now, and I'm going to try to not butcher it, okay? So we know that Market Cipher is an oscillator, and it's pretty easy to see that. However, something a little bit less easy to see is that time and price is also an oscillator within itself. And we know that price does not go straight up or straight down. And so what happens is if the market gets an expansion up and then gets a retracement and then an expansion and then a retracement, in other words, building market structure here, we can see that it's an oscillation within itself. And every time frame is its own oscillator, right? So the 1 minute time frame may oscillate this fast, right, with its expansions and retracements, while the 5 minute will go 5 times as slow, while the 15 minute will go 3 times as slow as that. I want you to keep this in mind because this is going to get important a little bit later. Because we have our oscillator when it comes to price, what do you notice about the oscillation? It's not like zigzags, okay? It's not straight up and straight down. It is nice and curved. And so what happens is whenever you see a divergence in the chart, it is the beginning of the loss of momentum, right? It's the beginning of the loss of momentum. It is the point in which your price starts to turn as it does. And if we were to draw candles within this curvature of an oscillator, it would look something like this. It would be up, down, up, down, up, down, bearish divergence, down, 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 like that, right? So it would look like this in terms of its oscillation. Next digit for the VIP Discord is a 2. So I want to share with you guys this analogy that I came up with last week when I was doing a one-on-one coaching, okay? It involves this rocket here. If you have a rocket that's shooting in the air, and while it's shooting in the air, you cut the gas, right? What happens? Does the rocket go up, 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 up? You shut the gas and then it goes down right away? No, there is something called inertia. That's right, your boy knows physics, okay? So what happens is, if you're in a rocket and the rocket's going up and you cut the gas, right? You shut the jets off, the engine, whatever. What will happen is you will continue to move up until you hit a plateau. In other words, until the upwards momentum is lost. And then that is the point in which you fall down. Now look at what price action does when you are looking for these divergences. So we put in our high, cool. Then we come down and we put in our divergence, what we're basically looking for. So we have our rocket, right? Rocket is shooting up, shooting up, shooting up. And then at this point, give or take, we are expecting them to shut the engines off. Remember, divergences are essentially just momentum being lost. And while the rocket is still going in the air, it is going to lose momentum. So we are predicting the loss in momentum. So if your rocket is coming up and we shut the jets off right here, it's going to keep its way going to the upside until it hits its plateau and then it comes to the downside. Now, remember, we talked about the different speeds of the oscillation when it comes to time frames, okay? And I said it was very important. I don't want you guys to spot divergences on the current time frame that you're on and then stay on that time frame. Yes, obviously you can do so to monitor your trades. However, if this is the 2-hour time frame, perhaps our, let's just say, 8-hour time frame oscillator is like this, right? It's a lot larger than our 2-hour oscillation. And so now you can start to see that given the context of what's happening in this divergence, all of these little waves just reside in a much larger wave on the higher term time frame. And so this here can really help you spot that exact top with whatever time frame you're looking on. And so when you kind of keep this picture in mind, especially when you're following market structure and you see a divergence like we did on Solana on the 2-hour, and then we come down and we break structure, right? We break structure right here. You can see that the overall momentum is starting to go. And just like on the 2-hour time frame, you have your rocket and your jet shut off. Your jet shut off on the larger term time frames as well. And these divergences can help you find the exact peaks of your higher term time frames. And so somebody commented in the last video saying, how can we turn a scalp trade into a swing trade? And when you understand this concept, just always think of the jets, and it works the opposite way as well. When you think of the jets and you understand this concept, you can really start to see the charts and become one with the charts and become one with the time frames and understand where you are just by looking at one time frame. You know, many people ask me which time frames do I use, what's my favorite, and my answer is always the same. I use all time frames. I can put myself in a position where I'm like in the multiverse of time and I can see all of these things. Okay, so I really hope that made sense. That was my third time recording it and probably my best take. I don't know how good it was, but I mean, you're stuck with it. The next digit for the VIP Discord is going to be a 1. But yeah, man. And so we're looking at the same thing on Solana. And for that reason, I am looking to hold the trade because like the illustration that we had over here that I just drew, we have the high, the low, the higher high while putting in a lower high on our oscillator, giving us a nice divergence. And then now we actually broke structure to the downside. So we would expect a higher low to then put in a lower high for a lower low. And this is just a 2-hour time frame. So now if we come to the 8-hour time frame, we can also see that we're relatively overextended here and that time is an oscillation. And so if we came up, then we are likely to come down. And if we're putting in those divergences on the lower term time frame, then it's likely that our 8-hour time frame will come down for its oscillation to then potentially come back up. We'll see what happens here. It's too far in the future for me to say. So at the beginning of the video, we talked about how this is kind of what CryptoFace's basic strategy is all about. And it kind of is, but you're really catching the top of it. So his basic strategy is essentially waiting for the nice curvature with the money flow, which by the way, money flow is a whole beast in itself. And I'm going to make a video that's probably going to be my next video. So make sure if you like the content, hit the like button and make sure you subscribe so you don't miss that video as well. But that's essentially what he does. So he waits for nice curves like this, and then he'll get in on what he calls the anchor trigger wave. Okay, so he'll get in at this point. For example, if we put in a red dot here on Solana, which would be after we get this retest, essentially we put in the lower high for then the lower low, and he would get in around there. Now, CryptoFace has the capital to be able to, I don't want to say lazily, but like not need to put in sniper entries. We don't have the capital that CryptoFace does. At least I don't. Maybe you do. I do not. So I need to get these sniper entries so that I can have a position that's large enough for my content. Okay. And that's essentially what this is here. But CryptoFace will get in on the next trigger wave essentially after putting in the divergence. Like we learned in the last video, your order of operations are VWAP, momentum waves, and then money flow. So we are to assume that after we put in a divergence on the momentum waves, that money flow will follow through. If you don't know what I'm talking about, go watch the last video. And so if money's going to continue on this downwards sort of trajectory, what's going to happen is we're going to get a wave. We're going to get a red dot here. Money flow might come up a little bit, whatever. But this is your anchor, trigger. Momentum is going down, and that's how you can short it. So that's essentially how you can find these divergences, and you can find the tops and bottoms of the markets just looking at divergences. Now, obviously, it's not as easy as short every single divergence, obviously, okay? And money flow is its whole beast in itself, but this is essentially how it's doing, and we're potentially waiting for that nice big 8-hour curvature on Solana to look something like this. So guys, that essentially is regular divergences. You know, when you pair that with my rule of when you have a red dot, look to the left, find the vector candles, it can recover the vector, etc., whatever, everything I preach every single day, it can really help you get some really good trades, especially when you're trading on these higher term time frames. And if you always just think about the rocket analogy in both directions, it will really, really help you. Think about when they shut the engines off. We should always be looking for divergences, and it's very beneficial for us to get those perfect sniper entries. And by the way, you can apply this on all time frames. So when you are looking to enter a trade, you are looking for divergences. Look at this right now on the 1 minute time frame. We have a divergence on Solana, and it's playing out currently, right? Now, not every single divergence will play out. Not every single 1 minute divergence will give you a 1.5% move, but you understand the idea. We are essentially looking for divergences, and 95% of my trades that I enter are divergences. So this is a very powerful tool. This is what you should be looking for every single time on Market Cipher. No questions asked. Last digit's a 7. Also, did you guys know that divergent kind of sounds like urgent? Divergent!